I'm Owen Bigland. This is the Inside Edge video blog. Quick heads up, if you're not following me on Twitter, I have become a lot more active on Twitter. I've been posting a lot of articles on there, a lot of opinion pieces from various websites, some of my private equity newsletters. So you can get a lot more up to date on things. I'm only doing this blog, as you guys know, once a week, although I have been doing a little more now. I've been doing an update on my regular update on Tuesday, and I've been trying to do an update every Saturday. The Tuesday one is kind of more Vancouver real estate related. The Saturday one is a little more, mental mindset, optimistic type stuff, investing, stock market, saving for retirement type stuff. So I'll try and do that for the next little while here because I've got a little more time on my hands, at least until May, and kind of take it from there. But if you're not following me on Twitter, the other thing I'll point out, though, I don't engage on Twitter. Sorry, I get so many people that are PMing, private messaging me and putting me in their tweets and stuff. It's just not my thing. I just don't have the time to, tweet back and forth on Twitter. But I am, it's a good resource for some of the articles on what's currently happening in the Vancouver market. I've been posting, some good investment articles. I've been posting some of the stocks that I've been buying over the last month and that kind of thing. So follow me on Twitter at Owen Bigland. But I posted an article from Ray Dalio. Many consider him to be probably one of the premier money managers in the world. Ray Dalio, Warren Buffett would probably both be up there. He runs a company called Bridgewater and Associates, and he had an article that he posted last week on his website called Cash is Trash. And I posted it to my Twitter account. I agree with a lot of things Ray Dalio is saying. Basically, it's that old scenario, don't fight the Fed. And, President Trump is going to do everything he can to keep the financial markets, the housing markets going. They've got unlimited resources, unlimited firepower. They will print as much money that they need to. Right now, it's somewhere around 5 or 6 trillion they're going to pump into the system, but that could go up to over $10 trillion. We'll see. Canadian government is going to do much the same, just on a smaller scale. So he was basically saying holding cash moving forward, probably isn't going to be all that wise. He's suggesting, you be putting your money into good quality equities, especially ones that can pay a dividend, which is even better. He also was talking about, a flight to tangible assets like real estate. And I agree. I know you've got all these doomsdayers out there right now, wherever you turn, saying that this is going to be the demise of the Vancouver real estate market. Finally, after 30 years that they've been the boy that cried wolf, this is finally going to be the big one that's going to put Vancouver real estate into a crash mode. I would say the opposite of that. I don't know where this is going to go over the next 3 to 6 months. There's definitely going to be some heavy fallout from what's going on right now and the lockdown, and I've blogged about it many times. The people in the blast zone that I call, in the hospitality industry and airlines, they are going to be heavily affected by what's gone on here. And I'm just hoping, we can get this economy moving here pretty soon. There's signs of optimism coming. It looks like in the U.S. they're going to start opening up slowly for business starting in May. But we need to get the economy back going. But it's a fine line between this and keeping a handle on the new case curve for the virus. But I agree with Dalio here. I think, in times like this, there's a flight to high quality assets like stocks of good quality companies like McDonald's and Johnson & Johnson and Procter & Gamble, and you're already seeing that. I mean, the stock market now is up 25% from its low. And the stock market tends to work quite a bit ahead, usually 6 months ahead. It's a forward-thinking market. So what the market is telling us right now, and it could change, is that things aren't as bad as they seem, that we are going to get the economy going again. And of course, they're factoring in the fact that the Fed will pump as much money, as many trillions as they need to get this economy kick-started and back going again. And that's why the stock market has been up so much the last 3 weeks here. It's a forward-thinking market. So a couple of other articles I posted here. I saw some doomsday people here, of course, saying that the Vancouver market's going to crash, nobody's going to be buying, the banks aren't going to be lending, and that's simply not the case. Last week, the federal government announced that they will be pumping between 150 to 300 billion into the Canadian housing market. So what they're going to do is they are simply going to buy 150 to 300 billion dollars of mortgages from TD, Royal Bank, Bank of Commerce, from all the major banks. In exchange, they will take over those mortgages and collect the mortgage payments in exchange for cash, so that these banks can continue to lend money on mortgages to keep the system going. And it's that old analogy, don't fight the Fed. And you can't. They are going to keep the housing market propped up, whether you like it or not. And I know there's people that are saying, oh, it's just a lot more debt, we're never going to pay all this. Well, they obviously don't really understand how this really works. Now, when the federal government takes over these mortgages, remember, that does not show up as a liability or a debt on the country's balance sheet, because they are going to be collecting the mortgage payments and the interest from these holders. In the article I posted on Twitter, I didn't realize that something like 10 to 15% of the mortgages currently out there now are not being held by the bank that you took the mortgage out from. So in other words, you might be paying $2,000 a month to Royal Bank on your mortgage every month, but Royal Bank isn't collecting that. They're just the intermediary. They've sold that mortgage off to CMHC or to the Bank of Canada or in some cases to private equity companies. So that's what they're going to do. They're going to keep liquidity in this market, and that's one of the reasons why I do think, and I don't know right now, and I don't want to guess, but I kind of think that the Vancouver market is going to be pretty resilient here, like it has with all the other things that have gone on over the last 30 years. We'll see. You know, the other thing that I've commented on my Twitter as well, and on some previous blogs here, you know, there's definitely going to be some people now that are really going to be hurt with this COVID-19 shutdown. But as far as my market goes, the main market, which is Vancouver, downtown Vancouver condos, Yaletown, Kitsilano, Mount Pleasant, East Side Vancouver homes, West Side Vancouver detached homes. Most of those people so far anyways, it's still early, are not in that blast zone. When you're buying a $750,000 one-bedroom condo in downtown, you're going to need $100,000 to $150,000 down and an income of six figures. So most of those people are still working, still collecting a paycheck, at least for now. Anything could happen, but the Vancouver market is probably going to be a little more insulated than some other markets. Other markets, maybe out in the Fraser Valley, where you can buy a one-bedroom for $275K. Those buyers may be off the table for a while and may not be coming back anytime soon. Let's see. But again, that really isn't my market. I kind of focus more on the Greater Vancouver Board, Vancouver, Richmond, Burnaby, New Westminster, and kind of the surrounding areas there. But the other thing I'll point out here too, there's already people saying, you know, there's going to be panic in the market and everything else. Well, I've been in the business for over 30 years, as people know. I've been through lots of bull markets and bear markets here. One thing I can tell you as far as Vancouver goes, over the last 30 years, rarely do I ever see any panic. Even back in the 08, 09, there were some people that had to sell for sure, and there will be some people this summer that are probably going to have to sell for financial reasons. But I think they're going to be in the minority for sure. And what I've also found, most people that buy in Vancouver and own in Vancouver usually have a fair bit of equity in the property. Most people, as I've blogged about many times here, are putting down conventional mortgages now, putting down 20% or more. Investors have always had to do that. In some cases now, banks are wanting 25% down now to buy an investment unit. I think Vancouver has the highest percentage of homeowners, or BC does, that own homes clear title. I know because I sell these homes all the time, where my seller has had this home for 15 or 20 years and does not have a mortgage on it. So, of course, there are some people that are going to be high ratio, maybe over leveraged, maybe they weren't able to get approved from a major bank at a 2% interest rate and had to go to one of these loan shark third tier lenders to get their mortgage at 6 or 7%. Those people could be in trouble, especially if they're in the blast zone. But what I've often found is that, especially I'm talking about Vancouver here, generally there isn't a lot of panic to sell. People will sell because they want to move up or they want to downsize. If they can't get the price or something close to it, they usually take the home off the market. And it's played out like this for decades here. And we'll see what happens moving forward here. I'll report all this to you guys as we go. I'm hoping to open up my business starting in May. I'm going to start putting my listings back out there. I've got a whole bunch of new listings that I'm going to put out that I'm in the process of preparing. Then we'll see. Uncharted territory. We'll see if the buyers are there, what kind of offers we're getting, what kind of interest we're getting, and where these things are selling at. Remember, I work both sides of it. If on the listing side we're not getting our prices, take it off the market. And then I'll put my buyer's hat on and maybe start working with some more buyers if there's some good value out there. So I play both sides of the fence in any market. But I think overall, you're going to see moving forward. I know a lot of people aren't going to like to hear this because I see in my comment section here, people are telling me that the market's crashing when it's not. Wishful thinking. But let's see what happens moving forward. But in my experience, once these listings start coming back out this summer and we're getting back to a little more normal circumstances and businesses are opening and the open houses are allowed and the social distancing has been relaxed a little bit, if sellers can't get the price and they're not forced to sell, which most won't be, they'll just take it off the market. And that's probably what I would advise them to do. Take it off the market. I'll go down to California. I've got a bunch of trips I got to go here, Hawaii, New York, work on my suntan, work on my training, and we'll relist it or relook at it in the fall and see where things are at then. But liquidity is there. The banks are still lending on mortgages, contrary to what people are thinking here. They're going to be getting anywhere between $150 to $300 billion in fresh cash coming in from the federal government to continue to put out these mortgages. And I'll tell you, I'm taking advantage of these low interest rates. I've been shuffling some things around, pulling out some equity. I had some properties that I had clear title on that I'm now at 1.9%, 2%. I'm actually taking out some equity out of these, and I'm either going to earmark it for some stocks, some equities, U.S. equities mostly. I'm a lot more bullish on U.S. equities than I am on Canadian here moving forward. And maybe even if something comes up later this summer or fall, I'm kind of in the market for another one-bedroom condo. If the right deal comes around, I'll be looking to buy another condo as well, but we'll see. I'm Owen Biglen. As always, thanks for watching. Stay safe. We're going to get through this. I'll see you next week.